Hi guys, this is Hector. Welcome to a new video of my trading course. I hope you're enjoying the course so far. In this video I'm going to be talking about confluences of support and resistance. Okay, they are basically the definition of a confluence is different elements of support and resistance coming together within few pips of each other. All right, basically, if you have one element of support or resistance and then you add up another element of support and resistance that's coming in your chart, they are falling in line in your chart within very few pips of each other, very close to each other, they basically strengthen each other, all right, and therefore that levels becomes double powerful as a support or resistance. Okay. First of all, I like to comment on the elements that I usually analyze. I usually draw on my charts in order to search for those confluence. All right. Firstly, the trend lines. Okay, you know. Old school trend lines. You know what a trend line is. Basically, if you have a downtrend and you have different swing tops, okay, falling in line within a straight line, okay, basically you have a straight line linking together all those swings high or swings low if you are in an uptrend, of course. That's what usually is called a trend line. Okay, you guys know probably what a trend line is. All right. Second, a counter trend line, which is a trend line that goes against the direction of the main trend. Just as a trend line was linking the swing highs in a downtrend or the swing lows in an uptrend, a counter trend line in a downtrend is a trend line that actually it's drawing up, it's pointing up against the main trend. All right. I know this might seem a little bit difficult to understand, but no worries. In a few minutes I'm going to be showing you some real examples of what a counter trend line is, and you will you will understand it very quickly. You know what it basically is. All right. Thirdly, the third element I usually look for in order to build up my confluences are Fibonacci retracements. Okay. You know what a Fibonacci retracement is basically, as you have a swing low, let's assume in a downtrend. Okay, you measure the top of the swing, okay, with the low of the swing, and then you get different levels of possible retracements. Okay, so as price retraces back up, it might find resistance at these different levels. The most typical levels of Fibonacci retracement are the 23%, which comes around here. Then you have the 38%. Then you have the 50%. The 61, and finally the 76. Okay, this would be the 23, this would be the 38, the 50, the 61, and the 76. I usually only pay attention to the 61, 50, and 38. In my opinion, if you have a swing down, okay, the 23 would come somewhere around here. If it only retraces back to the 23, all right, before shooting back down, in my opinion, that trend is usually carrying too much momentum for my taste, and therefore the shape of the trend is too steep on your chart. It would look something like that. I usually like to try milder trends, okay, trends that have a not so steep slope, okay, as per the trend in itself. All right, so I usually don't like the 23%. In my opinion, like I said, this trend is carrying too much momentum, and whenever that trend comes to an end, it will snap back up in very violently. So I don't usually pay attention to the 23, and also I don't pay attention to the 76. Okay, if we have our swing low, the 76% Fibonacci retracement, it would be up there. In my opinion, the 76% is dangerous because it means that the retracement is too deep into the trend. Okay, if you have a pullback that almost equals the previous swing high, all right, it means that the bears are not totally in control. The bears in a downtrend, okay, should be in control. They signify the downswing, and the bulls, of course, signify or push the retracement part of the swing. Okay, well, in my opinion, if the bulls have been able to push price all the way up to the 76, almost equaling the previous swing high, it means that, you know, they are not that weak in this downtrend. Okay, in the you don't, in my opinion, you know, you don't want price to reach the 71%, and you know, you want it to reach the 38, sorry, and you don't want to breach the 71. So as far as I am concerned, the optimum area to get a retracement to is the area between the 38 and the 61. I don't pay attention to the 23, I don't pay attention to the 76. This is not retracement enough, this is too much of a retracement, okay? So I want retracements to end, okay, between the 38, 50 and 61% Fibonacci retracement area. Alright, the next one is the previous swing high and low. Okay, basically, you know, as we have, if we have a downtrend, as in this case, the previous swing high, swing low, once breached, is the concept of basically former support, okay, now working as resistance as price retraces back. Okay, so if this level worked as support, once breached, it will work, or it should work, or it might work as resistance. Okay, opposite holds true in an uptrend. If you have a swing high, okay, as it breaches through this level, was before working as resistance, didn't it? Because, well, price indeed bounced down off that area. Okay, well, once broken, all right, this level will work as support as price retraces once back down once again. All right, so it's basically, like I say, the concept of former support turning to resistance, or former resistance turning to support. I'm sure you guys have heard this principle before. Okay, indeed it's true, and I'm going to show you some charts proving that. The fifth element I search for is previous breakout levels. Okay, whenever you have a pattern, a price pattern, be it a range, okay, or a triangle, whatever, once broken, that breakout level will become support or resistance. Let's assume we are trading a breakout of a range, okay, in a down. Actually, let me clean up the chart. Let's assume we are in a downtrend and we have a channel, okay. Price swings down, swings up, swings down, and then enters a period of sideways consolidation. Well, this area, okay, the channel, if we get, once we get a breakout, you never know, but if we get a breakout, this level of a breakout, okay, this former channel bottom, as price retraces back, it will work as former support, now working as resistance. Like I said again, I'm going to show you some examples to prove that that's actually right. Okay. And finally, the sixth element I search for a confluence, or I look to add as a confluence, is round numbers. Round numbers meaning those ones ending on 00 or on 50, on you know, 00 or 50. That means, for example, on the euro, if the I don't know, current market price of the euro is 134.00, this is going to be a point of support and resistance. Also, the 123.50, the 133.50, sorry, then the 134.50, okay, then the 133.00, 132.50, etc., etc. Okay, every 50 levels, every 50 pips at the round numbers, either the 00 or the 50 will work as support and resistance, especially from an intraday point of view. In my opinion, some people swear about pivot points as per the the frame, okay, as per the frame where price action moves within. Some people believe that the pivot points work as as intraday levels of support and resistance. In my opinion, round numbers actually wrap up price action more accurately from an intraday point of view than actual pivot points. It is my experience that once in a downtrend, okay, or in an uptrend, but let's assume in a downtrend, once price, by the way, these dotted lines are round numbers, okay, this is the 114.50, this is the 114.00, this is the 113.50, 113.00, etc., etc., okay. I have it marked in my screen, in my chart, with my special indicator that marks round numbers. You can download that indicator from the members area of the course, okay. So let's assume in a downtrend, okay, it is my experience that once price breaks a round number, it will tend to gravitate towards the next one, okay, and then we will see some reaction of this level, either a breakout in momentum or either a bounce of that level out once again to the upside, okay. But nonetheless, price tends to, in my opinion, to gravitate towards the round numbers. That's because large traders, okay, the institutional traders, meaning investment banks, hedge fund managers, etc., the people with the power enough, with the capital enough to move the market, they move enormous levels of enormous volume, of their trades are really huge, and like I say, they have the capacity to impact the market, and they tend to place their limit orders, either entry or exit limit orders, around the round numbers, all right. So that's why basically once price reaches a round number, it's bound to react in one way, either a breach through if we hit some sell limit orders around here, or a rebound back up if we've seen some buy limits around here, okay. But anyway, those are the elements I like to keep an eye, okay. Trend lines, counter trend lines, Fibonacci retracements, previous swing high or lows, previous breakout levels, and round numbers. All of them around within the dynamic area of resistance. That means that, in my opinion, in order to search for an entry, I must have two conditions, okay. Firstly, I must have a pullback to the dynamic area of resistance, okay, and second, I must have a confluence, all right, around that dynamic area of resistance. That means that if I have a pullback to the dynamic area of resistance, but I cannot find any, few elements of support or resistance, few of these elements, okay, coming together around this area, this will not be a valid setup in order to search for an entry. Moreover, if I find a confluence of different elements of support and resistance, but they do not happen around the area between the 30 and the 50 simple moving average, let's say they happen here, or somewhere in very far away from the dynamic area of resistance, that's not a valid area to search for a trade either, okay. So you must have both of them, okay, both the requirements. First of all, to have a pullback to the dynamic area of resistance, and second, to have a confluence within that dynamic area of support and resistance, all right. Okay, I hope that was clear. You have to have both elements, okay, both the dynamic area and both also a confluence at that area. You must have both of them in order to have a valid trading setup. All right, now I'm gonna show you some examples in order to so you understand how I draw my technical analysis elements, meaning these elements here, in order to build up my elements of confluence, okay. In this case, I am showing you the chart of the Canadian dollar against the Japanese yen on the 1 hour time frame, and we are looking into this particular swing, okay. this particular swing, as you can see, well, first of all, we are in a trending scenario, all right? It is true that it's a little bit snaking around here, but for the purpose of this video, let's not pay attention to that, okay? I just want to talk about in this video about confluences of support and resistance. So let's not talk about the trend in itself. Let's assume, as it is in this case, that we have a nice downtrending scenario. All right. Therefore, we would assume that we have all the moving averages pointing in the same direction, parallel to each other, price nowhere near the 100, etc., etc. Okay. All right. In that case, we focus our attention in the area around the 30 and the 50, as usual, meaning the dynamic area of support and resistance. Now, as I was mentioning before, a pullback to that area is not enough. Now I've got to search for levels of confluence around that area to base my trade from. Okay, I want price to respect my confluence, my levels of confluence. So I'm going to begin to draw some technical analysis elements, some trend lines, some counter trend lines, some Fibonacci retracements, etc., etc. All right, let's get going. First of all, trend lines. Do we have a trend line here? Yes, we do. We have a trend line here. Actually, let me draw that properly, linking these two levels right there. That's the trend line we have in this chart. Fair enough. Now, do we have a counter trend line, meaning a trend line pointing against, okay, the trend? Well, yeah, we have here this one, but I'm not paying attention to that one, since, remember, we are going to be looking, let's assume this is current market price. I'm going to be looking into this swing, okay? This is the swing I want you guys to pay attention. So around that swing, do I have any element, any counter trend line going against the trend? I don't really have any, so no counter trend line here. Okay, do I have any Fibonacci retracement? Yes, I do. Okay, I have the 50% Fibonacci retracement right there. Okay, this is the 50% Fibonacci retracement. All right, good enough. Now, do I have any previous swing high or low? Well, let's see. These are my previous swing high or lows. Bingo. We have another one there. Okay, any previous breakout points? Actually, this is rather a breakout point. Okay, since we were forming a triple bottom there, we were forming actually a triangle. That level, breakout level, once broken, it became former support. It became resistance right there. Okay, retrace back there, retested previous levels of support. Okay. And from there, it bounced back down. So yeah, we have a previous breakout level, formerly working as support, now hopefully working as resistance. Any round number? Yeah, we have the 11100 round number right there. Okay. So what does that mean? It means we have few elements coming together at the dynamic area of resistance. We have the round number, 11000 round number. Also, we have the Fibonacci retracement, the 50% Fibonacci retracement right there. The trend line, well, not quite there. It's actually about 30-40 pips above there. Markets are not perfect, but in any case, this is not that close. So, well, we cannot really count the trend line within this, within this confluence. Okay, it's a little bit too far away, in my opinion. What we do have indeed is the previous breakout level. Okay, previous triple bottom broken. Once broken, former support becomes resistance. Okay, so we have three elements coming together: previous breakout point, round number, 50% Fibonacci retracement within the dynamic area of resistance. Yes, in my opinion, this is a valid setup. Okay, this is indeed at that level. Okay, the 11100 level. We have indeed an area of many elements of resistance coming together in a downtrend within the area of dynamic area of support and resistance. What does it mean? It means that any pullback around towards the 11100 will make me want to pay attention to this trade, because if price rebounds of that area of as I was saying, of confluence of resistance in a downtrend within the area of dynamic area of support and resistance, this is a very high probability chance that I am going to score some profits. Okay, if price bounces down of this area of the 11100 level, okay, and turns around in the direction of the main trend, you're good to go to search for short entry, to trigger your short entry, because you will be riding a high probability trade. Okay, you have many elements backing up your short position. Okay, many elements of resistance in a downtrend within the dynamic area of support and resistance. As price begins to turn around, if you trigger short entry, that's going to be you're going to be like, I don't know, a 70 to 30 probabilities on your side. Okay, you are definitely be trading a high probability trade. Okay, now I'm going to be showing you another example. In this case is the Australian dollar against the American dollar, the Aussie, okay, on the 30 minutes time frame. Well, it's basically same thing. Nice downtrend, okay, dynamic area of support and resistance coming around that area. Now we're going to be paying attention to this swing, by the way, guys. Okay, I want you to pay attention to this swing. So we have a clear downtrend as per the moving averages, and therefore I want to pay attention to any possible bounce around this area. Okay, moreover, as I was saying before, there are two conditions. One's a pullback to the dynamic area of resistance and support, and second, having a confluence of different elements at that level. What do we have? Well, we have, first of all, I want you guys to pay attention to this swing. Okay, first of all, we have the pullback, and we have a round number, the 0.8000 level right there is touched right to the pip, isn't it? Right to the pip. Okay, at this level, okay, imagine price was somewhere around here, okay, began retracing, and then we've got to think, okay, where is my strongest level of resistance that I want to enter short from? Remember that trading, price action trading, is nothing but buying support and selling resistance, always in the direction of the main trend. In this case, downtrend, so I want to be selling resistance. Where is my strongest level of resistance? My strongest level of resistance is by far the 0.8000 level. I have a round number. I have a previous swing low, former support, now working as resistance. That's two elements together. Now if I draw some Fibonacci's, right there, I have the 38% Fibonacci, 38% Fibonacci around that level as well, within few pips of each other. Now that's three elements coming together, okay, within the dynamic area of support. Okay, that's four elements. So in a downtrend, okay, in a downtrend, loads of resistance at this level. As soon as, if I see price retracing to this level, I would usually, this is a personal trick of mine, it's up to you whether you want to follow it or not, but I personally, what I do is to place a sound alarm few pips below, let's say 10 pips, 15 pips below that level. So if price retraces back to that level, I know I want to, well, you know, my trading platform beeps up, getting my attention onto this chart, and then I want to be following this chart in real time, searching for turn around, okay, for a bounce down as per my entry requirements, which well, you will study throughout the chapter number 2 and chapter number 3 of this course. Okay, But as price retraces back, my sun alarm goes off, I am following this chart in real time, my confluence is right at this level, at the 0.80 level. I want this level to hold the retracement, okay? If I see that price breaches through, alright, and basically breaks my strongest level of resistance, then I don't want to enter short. If I see that price cruises through and breaks, cuts through my resistance levels like a like a knife, then I don't want to enter short in this. I don't want to search for shorts anymore. Why would I want to enter short if my strongest level of defense has been breached? Okay, remember, trading is always buying support or selling resistance in the direction of the main trend. Since this is a downtrend, I want to be selling resistance, okay? If my strongest level of resistance has been breached, then I don't want to enter short anymore. I don't want to search for short entries anymore, okay? But if my strongest level of resistance, of defense, which is the 0.8000, holds the bounds, many different elements coming together to defend that level. Remember, the 38% Fibonacci, the round number, 0.8000, the previous swing low, etc., etc. If this level, all my soldiers come together here and bounce, make price bounce to the downside, right as that happens, that's a high probability trade. I am trading in the direction of the main trend. Moreover, I am trading right off the dynamic area of support and resistance. Moreover, I have different elements, different soldiers working as resistance in my favor. And moreover, I am waiting for the confirmation as price stands around. If I trigger my short entry, let's say right there, as price came back up, bounced off this area and turn around, okay, once I have that confirmation that price is standing around, this is a very high probability trade. You are adding so many odds on your favor, okay? The trend, the confluence, the dynamic area of resistance, the actual bounce. Remember, you wait for the actual turnaround to happen. There's so many elements coming in your favor, man. So many elements. No wonder 70%, 80% of the time you will see price moving in your direction. Sometimes, you will score a loss here and there, but most of the trades will be winners, okay? If your strongest level of defense is respected, remember, if we breach through, you don't want to sell, you don't want to enter short anymore because your strongest level has been breached, okay? The wall of your castle has been breached, and well, you have no defense no more. You don't want to enter short anymore. The bears have been beaten, let's say. But if the bears defend the castle, okay, there are high chances that they will win the war, or at least the battle, okay, such as in this case you score a profit there. Now I'm going to be showing you another example. In this case is the euro the euro against the JPY, all right, on the 4 hours time frame, okay, euro against the JPY on the 4 hours time frame. First of all, what do we have here? Well, we have a clear uptrend, don't we? Okay, moving averages nicely pointing up, okay, price nowhere near the 100 until this point. At this point, the trend was broken, okay? But up to that point, we are clearly making, higher highs, higher lows, and bouncing very nicely off the dynamic area of support and resistance. Like I said, up to this point in this at this time, the trend is finished. Okay, all right. Let's get working. Let's search for a possible trading setup. As usual, in an uptrend, what I want to be looking into or pay attention to is the dynamic area of support. In this case, since we are in an uptrend, I mark that area in my chart very clearly. This is the area I want to be looking into. Fine. Now we have the first condition. If we get a retracement back here, I'm going to be searching for long entries. Now I need a second condition. Remember, first condition, have the pullback to the dynamic area of support and resistance, and second, to have a confluence of different elements of support or resistance around that area, coming within few pips of each other. Good. Now let's see what elements do we have around that level, around this level. Pay attention to this swing, guys, please. Alright, first of all, we have a round number 154.00, that level right there. Moreover, we have a counter trend line. Let me show you this counter trend line from the swing high to this other swing high right there. Okay, I'm linking these two swing highs. Okay, former resistance there, former resistance there. Now working as support right to the peep. Okay, that's a counter trend line. I hope now you understand, now seeing it, seeing a real example of what a counter trend line is. I hope you understand, you know, you have a better graphical picture of what a counter trend line actually looks like. Okay, right there, this trend line worked as support, now it's working, sorry, as resistance, now it's working as support. Right, now, so we have a counter trend line, we have the 154.00 level also coming together around them. Let's see if we have a Fibonacci like that. Whoops, I didn't draw that properly. 1 second, let me squeeze that. Ah, Jesus. There we are. There we are. Do we have a Fibonacci retracement around there? Well, not quite. We have the 61 around there, but remember, we are paying attention to the 154.00. Yes, we have the 50% Fibonacci retracement. It's breached a little bit, just a little bit, but it's not too bad, really. Actually, it just breaches through very temporarily, but immediately after it shoots back up. So it depends how aggressive you are or how conservative you are as far as stacking up your different elements of support and resistance. From a general, you know, from a general point of view, anything within the 38 and the 61. I don't usually look at the Fibonacci retracements as per the exact level right to the pip, but rather as an area. Okay, anything between the 38 and the 61, I usually take it as a whole area of resistance. But anyway, that depends, like I said, on how conservative you want to be. All right. So we have the round number, perhaps a Fibonacci level, we have the counter trend line, we have the dynamic area. Let me mark again the dynamic area of support and resistance. Well, support in this case is we are in an uptrend, okay? And well, we this is the level, okay, our level, the 154.00. Okay, we had well, basically we are waiting for price to retrace back up. I would have placed my sound alarm, like I say, few pips above that. As price retraces down, the alarm goes off. I now focus my attention on this chart on real time, and I'm paying attention to this level, okay, to the 154 level. Let me actually mark it, okay? This is the level I want to pay attention to. What I'm going to be doing now is, as I explained on the previous chart, there are two options. As price retraces down here, there are two options. Will price breach through? If it does, I don't want to search for entries anymore, because my strongest level of support, my strongest level of defense has been breached. Therefore, the setup is cancelled, is void, it's no value, no more. All right. Instead of that, if I get a bounce of that area, if the walls of my castle actually hold the assault, then this setup becomes a high probability trade, because I'm trading in the direction of the main trend and my defense is holding. Okay, the bulls have held the bears at this level, at this junction of the chart, and upon this bounce, anything happening, any entry taken right there after the bounce is going to be a high probability trade. All right. well, I think this was a clear example, but actually let's continue looking into this chart, because actually it happens once again on the next swing. Okay, we've now analyzed this swing down. Now let's analyze the next swing up. Okay, it actually happens the same thing all over again, but instead of the one at the 154.00 level, it happens at the 155.50 level, another round number right there. What do we have? We have the 155 level, round number, so that's one element in our favor. Then we have the previous swing high, okay, former resistance, once broken, becomes support right there. Now we have two elements, but now pay attention, because we have another element in the shape of a trend line, okay, right there. That's a third element, okay, coming together. But hey, hold tight, because we haven't yet drawn our Fibonacci's. Now in fact I can verify that the 38% Fibonacci comes right to the pip at that level. You see this line, this blue line is the 38 Fibonacci retracement. It comes within 3 pips actually of the 155.50, so that's 4 elements coming together. I mean, come on, this is such a strong level of support. We have one previous swing high, former support coming, forming resistance, sorry, now working as support. We have second element, the trend line. Third element, the round number 155.50. Fourth element, the 38% Fibonacci retracing, and all of them happening around the dynamic area of support. Wow. In an uptrend, in a clear uptrend, let's not forget that we are trading in the direction of the main trend. No wonder upon bouncing off that level, we are seeing such a beautiful swing up. Okay, it went all the way from 155.50 to 158. You make the maths, that's 250 pips straight up right from the bounce of a very strong level of support. It's a beautiful setup. Actually, it's a perfect setup. Okay. Now let's try to get some more juice out of this chart. Let's keep on going on to the next swing. We project our trend line. All right. Let's keep on drawing. Actually, let me zoom in a little bit so you guys can see that better. Now I'm scrolling back. There we are. Okay. So we finalized this swing. Now we finalized this swing. We got two beautiful swings up, two beautiful trades of a strong level of support, confluence of support around the dynamic area of support as well, and therefore we gotten two beautiful trades. Now let's analyze the next trade. All right, how would we go about it? Well, we once again we are waiting. Once we've squeezed some profits out of this swing, basically the whole thing starts off again. We're gonna be waiting for the next pullback down to support levels in order to search yet again for another long entry. As usual, if you are in an uptrend, you only search for long entries. Okay. Where is my strongest level of support? First of all, we have this trend line. Remember the trend line we prolonged to to use it once again as an element of support for a new trade. Okay, it comes around as price pulls back. It comes around the 156.50 level. Okay, so we have. In my hand, we have the 156.50 round number. That's element number one. Second, we have the trend line in itself. That's two of them. Third, we have the previous swing high coming at 156.40, 45 actually, right there. This swing high right there. But nonetheless, it comes very close, within very few pips pips off each other. Okay, actually, like I was saying, it's the 156.40, this level right there, 45, sorry, right there. But anyway, it's only 5 pips. It's good enough. Okay, markets are not perfect. It's impossible to expect all the elements to fall in line right to the pip. That's impossible. But 5 pips within each other, it's certainly all right. Okay, so that's another third element. Let's see, we have a Fibonacci retracement around this area. Yes, we have the 61% Fibonacci level right there, also at 156.40, 156.45, around there. Okay, so that's 5 different elements. Okay, at the around the 156.50 area, which is the area, also the dynamic area of support cam around there. Okay, so the 156.50 is definitely an area we want to be searching for long entries from. Okay, if price retraces to the 156.50 area, I want to be searching for long entries in this chart. Okay, so as usual, I would place my sound alarm 15-20 pips above that level, okay, right there more or less, in order to wait for a pullback. If it is to get a pullback, you never know. This swing might continue on and on and on forever. You never know in Forex markets. But sooner or later, it's going to retrace. Okay, it's going to pull back back to support levels. Okay. And I want to be ready at those support levels, which, like I said, in this case is the 156.50. Okay, we get the breakout. The pullback to my strongest level of support. Like I was saying, in this case, 156.50. Once price pulls back to that decision-taking area, we have 2 possibilities: either it breaches through, or either it bounces back up, just as it did here and as it did here. Okay, well, as it turned out, price basically broke through. Okay, it drove through in momentum this level, the 156.50. You see, it did not happen. We didn't see this turnaround, did we? We did not see this turnaround either. Okay, instead we got a total breakout, okay, of that of the strongest level of support at that level. So if my strongest level of support has been breached, do I really want to search for long entries anymore? Obviously you don't. Okay, obviously you don't. So in this case, as we saw price driving through, we would have cancelled the whole thing. Moreover, later on, while it breaches the 100, the 30 begins to curl around, the 50 begins to curl around as well, begins to point down. The whole thing becomes a mess. Okay, so the trend is certainly cancelled, and our strongest level of defense was breached. No point to search for long entries anymore. But the strength of this system is that whenever the right circumstances apply, okay, a turnaround at very strong levels of confluence in an uptrend, we search for long entries. We write a high probability trade. Okay, same here, high probability trade. And when the conditions do not apply, we simply don't trade. Okay, such as in this case, if we had gotten the turnaround, we definitely would have wanted to enter or look at least for a long entry, because it would have been a nice trade, high probability trade, just as it happened in the previous swings. Okay, instead we broke through. We simply cancel the whole thing and we close this trade. We click on this X red cross up there, and we take no trade, we take no loss. Okay, that's the beauty of this system. When the things look good, you take the trade, and you take a high probability trade. When the things don't look anymore, you just don't take any trade. Okay, that's the way I base my trades, okay, or my trading approach, where all the DAX are falling in line, okay, in my favor. I know I'm riding a high probability trade, I risk my money. When things begin to fall apart, I simply remain on the sidelines. Okay, in the long term, chances are on your favor and you will make money. Now I'm going to be showing you very quickly another chart, okay? In this case, the euro against the Canadian dollar, okay, of the 4 hours time frame, very quickly, because this video is getting too long already. As usual, I keep on rambling on, and the videos just go, this one is already 44 minutes long, and it's time to wrap it up. Anyway, euro against the Canadian dollar of the 4 hours time frame. Clear downtrend, okay, beautiful downtrend, moving average formation, okay, very clear dynamic area of resistance in this case. We are going to be looking into this swing, by the way, guys. Price nowhere near the 100 moving average, etc., etc. Why? Well, as usual, what I want to be doing is to keep an eye on the dynamic, on any pullback to the dynamic area of resistance, and to search for confluences around that level. Good. Imagine live price was somewhere around here and price began to pull back. I will be looking for my strongest level of defense. Well, this level, I'm gonna try to find it. I'm gonna draw some trend lines. There we have a trend line. Okay. Let's now draw some Fibonacci's. Okay, that's my Fibonacci. Now let's draw, I can draw definitely well, first of all, I have a previous swing low here, but it's way too far away. As you can see in my screen, it's way too far, okay? So that doesn't count. I can remove this line. But now I have a counter trend line. If I link this swing low with this swing low and I prolong it, there we are, okay? You see, I've linked basically this low, and this low, and like any other trend line, you prolong any time, and it comes around that level as well. I have the 144 double O round number, the one round number there, all right, coming within few pips as well, right there, and all that happens around the dynamic area of support and resistance. Well, guys, you know what comes next? A high probability trade if this area holds. As usual, you place your sound alarm few pips below that, okay? Whenever price pulls back to that area, your alarm goes off. You focus your attention on this level. If it breaches through, you cancel the whole thing. If instead this very strong area of different elements of resistance, basically, as I was saying before, your strongest level of defense, if it holds and price begins to turn around, any short entry around here, once you have the confirmation that it's indeed holding, it's going to be a high probability trade, and you will score some profits, as you can see on this chart, okay? It really is very simple. As you can see, all my I just do the same thing over and over and over and over. All right, it's repetitive. I know it's repetitive. I know it's boring, but it makes money, and that's the point of it. You draw your points of your different elements of resistance. Okay, you have this trend line, work test resistance there. Well, now why not there? Then you draw your counter trend line, you draw your Fibonacci's, you check your round numbers, etc., etc. Do I have any level around the dynamic area of resistance coming together within few pips? Yes, I do. Yes, I do indeed, sir, around this level, don't I? Yes, I do. Well, I'm going to be searching for, first of all, a pullback back to that area, okay? If there is no pullback, there is no trade. Remember that, okay? You need a pullback in order to pull back to the dynamic area. Remember the two conditions. First, a pullback to the dynamic area of resistance, and then second, a confluence of different elements of support or resistance around that area. In that case, we have it here. We have the second condition applying, okay? That second condition in check. Well, once that happens, if that area holds, if it's not breached through, if instead of that we get a turnaround right there, it's a high probability trade. High probability trade for a short opportunity to make some pips. Okay? I have many more examples to show you. I'm basically gonna be showing you the same thing. I don't know if you guys are tired or not. I just want to make sure that you understand this concept. Okay, in this case, we are looking into the GBP against the Australian dollar in the 1 hour time frame. Very quickly, same thing, downtrend as per the moving averages. Okay, when we have a downtrend, a strong downtrend, we keep an eye on the dynamic area of resistance in this case, since we're in a downtrend, and then we begin searching for confluences around that area. Okay, I'm gonna. By the way, I'm looking into this swing, guys. Okay, actually it worked again in this swing as well. I will show you now, but I'm sure you guys can already see how. Sorry, I had to pause the video. I just got a phone call. Anyway, let's continue. So I'm looking into, as I was saying, I was looking into this swing down here, okay, and then it works again once again there in the next swing. Whenever you are riding a strong downtrend, you can exploit many different swings, okay, not just one swing, but actually consecutive swings, okay. Anyway. In this swing here, we have a clear downtrend line there. We have the 235.50 round number, okay, right there. Also, you have a Fibonacci, the 50% Fibonacci level right there, okay, that's the 50% Fibonacci. You don't have a previous swing high because it comes up there, so that's not valid. But nonetheless, you have few elements coming together, okay, at the around the dynamic area of resistance, and well, as price begins to turn around, once again, right there, you would have made a nice profit in a high probability trade. And actually, as I was saying, in the next swing, okay, basically you have the same type of setup, okay. Let's draw some Fibonacci's on the next swing. And well, oops, let me draw that properly. Sorry, 1 second. Right there. Well, what do we have? We have this former trend line, okay, which, well, we've just extended from the previous swing. We stand it in time, and we get it. It comes in line, it falls in line at that level as well. Also, we have the 234.00 round number. We have the 38% Fibonacci retracement of this whole swing down, okay. And moreover, we have the previous swing low, former support, now working as resistance right there as well. Well, guys, it's basically the same thing. All of that coming together around the dynamic area of resistance and in a clear downtrend. What does it mean? It means it's a very high probability trade as it turns around, as this area confirms that it is holding, that it doesn't breach through. As it turns around anywhere around there, it would have been a nice short entry. Okay, it's as you guys see, I always follow the same type of trading approach. I use the same tools over and over and over. You just need to master these tools in just by themselves. The 3 simple moving average conditions, the confluences of support and resistance, the dynamic area. The dynamic area of support and resistance, you know, price confirming that that confluence is holding. And you're going to be trading high probability trades, guys. It really is. Like I say, you're going to be scoring over the long term. Definitely your winners will be outnumbering your losers. Alright, final chart, okay? Very quickly. I had so many prepared to show you guys, but no matter where I look, I find these setups. It's like I say, they happen so often. Nice uptrend as usual. Nice moving average formation. Then what we do is, as usual, keep an eye on the dynamic area of support or resistance, the area between the 30 and the 50 moving average. In this case, we have a swing up. Then as it pulls back, we like to keep an eye on the area between the 30 and the 50, as I was saying, and moreover we search for confluences of different elements around that level. In here we have the 0.7250 round number right there. We also have the previous swing high, okay, former resistance, once broken becomes support. And also if we draw our Fibonacci, perhaps we can find indeed we find that the 50% Fibonacci level falls in line right to the pip, actually perfectly right to the pip, with the round number, the 0.7250 round number, and the previous swing high. Well, what can I say? We have everything in our favor. Uptrend, dynamic area of support, confluence of different elements of support right around the dynamic area, and finally what we get is price is not breaching through, in fact is touching this level and turning around. Any long entry around there, once the turnaround is confirmed, any long entry around there, it would have been a high probability trade. Well, what can I say, guys? It is really as powerful as it looks like, okay? It really is. Just browse through my website. You will see that I use these same conditions, okay, these same tools over and over and over and over, and it works. It works. Like I said, just browse through my blog. You will see plenty of live trades recorded live, okay, recorded live, remember, and you will see that I apply these same tools in my daily trading routine. I want to show you guys the tools that I use, okay? That's why I record these videos. That's why I have gathered up this trading course, so I can show you all the tools that I use, okay, both in this first chapter and in the next eight chapters of this course. Well, this was one of them, the confluences of support and resistance around the dynamic area, and always in a trending scenario. Once you have those three conditions, okay, a trend, a dynamic area, support and resistance, and then a confluence within that area, any bounce off that level, okay, as you confirm the turnaround, that's a high probability trade. 70% of your trades, 80%, 65, 75, you know, anything anywhere around there, they are going to become winner trades. And in the long term, like I said, your winners will outnumber your losers, and therefore you're going to be making money and growing your account. Of course, there is much more to the system than just that. Of course, that you've got you gotta use proper money management. You gotta use proper stop loss placement, proper profit taking levels, proper entry signals, etc., etc. There are many more elements to my system, but so far, for the time being, I don't want you guys to worry about all those elements. For the time being, like I say, I just want you to realize the power of these three elements, the power of trading, a confluence of support and resistance, okay, around the dynamic area of support or resistance in a trending scenario. Whenever these three elements come together, the trend, the dynamic area, and a confluence of elements within that dynamic area, as soon as you see a bounce of that confluence of support and resistance, of different elements of support and resistance, you know that you are trading a high probability trade. You're stacking up odds, you're stacking up probabilities, chances on your favor, and at the end of the day, that's what trading is about. Alright folks, this video is way too long. It's time to wrap it up, it's time to close it down. I hope you understand this concept of confluences. If there is any question, if there is any doubt you may have, don't hesitate to send me an email. I will very gladly answer all your questions, okay? Alright folks, I'll be seeing you in future videos. Bye bye.